good early afternoon or maybe morning, depending on where you're tuning in from. Hi, everybody. It's Jeremy here at Element Greenius. And this week, we're bringing our friends in from LendFlow. With us is John, joining Jana to have a little bit of discussion surrounding, small business loans, cash advances, really what it's going to take to get your organization to the next level through whatever means it might be, in this case, through financial products. So I'll let the experts take it away from here.
Thanks, Jer. Hi, John. How are you doing? Thanks for joining us today.
Yeah, awesome to be here. Doing very well, and excited to be here as part of the conversation today.
Yeah, for sure. We've been working with John and his company LendFlow for quite some time now, and been setting up the LMN Lend with them and facilitating our customers to be able to reach some cash flow and financial management products out there. And we thought we'd do a little spotlight on some tips and tricks and some more information and what's new going on in LendFlow as well too. Lots of changes recently, lots of growth there, and lots of opportunities.
Yeah, that's exactly right. It's things have been really picking up this year, and hopefully everyone's seen that in their business. And things just keep getting better and better. So excited to go through all the updates and have a great conversation today.
Yeah, for sure. So John, tell me a little bit about yourself. Give me the 2-minute rundown. How did you get into the business? What have you seen? What do you like about this industry?
Yeah, definitely. Happy to share. I've been in the SMB lending space 14, going on 15 later this year. It'll be 15 years. So been around a long while, been through, all kinds of ups and down cycles over the years. So seen things from a lot of different angles. Also worked in a lot of different, capacities with lenders. Worked to help them, optimize their processes, improve their underwriting models, adapt to technology. A lot of new innovation that's coming out that they can access and help them, move there more quickly. And, from all of those experiences, just saw a lot of the gaps and the needs in the space and built LendFlow to holistically solve those. Both of like, how do we bring lenders to where their borrowers are, help them leverage more of the data, understand those businesses better so they can get to more approvals and better approvals to those customers once they, take, and use that data to their advantage. And, how do we optimize and make their loan processes very efficient so those savings can be brought down to the customer as well. So that's the high level.
Yeah, for sure. And I love how you guys cater to, the niche markets that, 5-10 years ago necessarily was a little bit of a roadblock for us in the construction industry for, lenders to actually understand the way we operate and our cash flow needs and things like that. And are you seeing a lot more broader providers giving us the opportunity to get in there at decent rates and kind of really understanding the business, and what's changed there?
Sure. I mean, it's been moving, it's been progress. Post kind of a pandemic area, a lot of lenders and banks are starting to now get back into how to better understand businesses again. A lot of the ones that were struggling or weren't doing things the right way have kind of, either pulled back or have exited the market entirely. And so now it's the ones who are left are really committed and focused. And we've seen some great progress there over the past, year in particular. And I think things are just ramping up and getting better and better. And I think you'll begin to see that with better experience, like faster approvals, better approvals. And, there'll be a combination of things that lead to that. I think it's one, getting them to run better processes, to generate offers more quickly, remove more humans from the loop. So improving the lenders, helping them better understand the data. There's been several that have been really, really good about digging into that and made great progress there. A little bit, it's going to be the external market, right? Of like what happens with interest rates. Obviously, with them being so high, that's made it more difficult for them to lend and more expensive to the customer. So if that can trend down, that'll be some really nice tailwinds for everyone for accessing financial products. And then the other is just the experience, with LMN. and how we can listen to the needs of the customers and add more lenders and add more products that customers need and want and are asking for. And so that'll be the other. How can we add more new lenders to the network and get them, moving in that same direction as well, as far as using the data and using these automation tools to better serve. So some nice tailwinds, and I think you'll see even most movement in the last year, I think, ever. And then I think over the next 1 to 2 years, you'll continue to see that accelerate even more.
Yeah, for sure. That's great news. And I think, it's important for us to talk a little bit about the why of the financial, right?
Yep.
I think all too often we get into these situations where we get into a cash flow crunch, or there's some changes in our jobs or hiring practices or equipment needs. And we kind of are reactive instead of proactive in setting up all of our financial needs, right? And would love to just talk a little bit about, some of the reasons that would be great to be in that proactive mode of thinking about these financial products that are out there before they need them. So, there's lots of things there. I know we went through a series of cash flow crunches in many, many years, and then realized, okay, when things are looking good and the financials are looking good, that's when we apply for extra money when we don't need it. And it was a game changer. And what's nice now is there's way more products than there was, when we were looking for equipment financing or cash flow products or accounts receivable lending as well too. So let's chat a little bit about, why, when, that type of a thing.
Yeah. Now you're absolutely right. It's being proactive. It's just like anything with your business. The more proactive you are, the better you'll be able to see into the future, the better prepared you're going to be when it comes. Most have been running the business a long time. And so they have a lot of feedback from the past that can inform them of what's going to happen in the future. And so you just got to take all that data and be able to use it. And use it to your advantage. And if you're, like you just said, Jana, if you're doing really well, then you can start preparing. And it's the best time to prepare when you're doing well, because the lenders are going to see that and they're going to want to give you the best rates and terms, and you can lock them in, because the better you are, the better rates and terms you're going to get, right? And you can lock those in early. So if you're a busy season and it's the summer and you're just out there killing it, doing very well with the business, you may want to apply for a line of credit at that exact time. So that way you don't have to draw from it. In many cases, you can just open up the line. You can have it there and at the lowest possible rates, the best terms from the best lender. And then when you have that inevitable cash flow gap in the future, you're ready. And that way, if it's just a cash flow gap, you don't have to take a financing product that's not built for that cash flow gap. If it's only a 1, 2, 3 week gap, you really only want to be paying interest for those 1, 2, or 3 weeks. You don't want to have to pay interest over 6, 9, 12 months if it's not necessary, right? That should only be for something that's going to drive revenue over a 12-month period. And so if you can kind of match the product to a future need that you're likely to have in the future and do it at the time when your business is doing best, that's when you can really use these financial tools, just like any other tool that you're using in the business. That's what they are. And if you can use them in the best way, you're going to get the best results. Yeah,
no, that sounds great. And then, John, I think we kind of used to talk about and used to plan for almost having 10% of a cash reserve fund or liquidity kind of throughout the business against your revenue. Is that still kind of benchmark today?
I mean, that's a great benchmark to use. And that's really, really healthy. Obviously, get it as high as you want. It's good to have that reserve. And it's also really good because lenders know about this reserve too. And they really like it when you have it. And they're going to look at the history and see hey, what kind of reserves have you kept? And how high have you been able to maintain them? And that'll be an important criteria when they're assessing the credit risk of your business. And so it's great to have that reserve just so you have it. for any emergencies that come up. You don't want to ever be caught in like an emergency situation where you have to just take whatever's available right then. Again, lenders are going to recognize that and they're going to price the risk accordingly, which means, worse rates in terms. So, keeping those cash reserves is critical just for an emergency fund, but also because it makes your business, the business credit that's going to be driven from that metric is going to be much, much stronger. And so when you do go apply, you're also going to get credit for that. And that means better rates, better terms, better products across the board.
Yeah, that's great. And I think that would apply for like a lot of our seasoned businesses. But what's nice is there's some products out there for newer businesses or businesses that are just getting off the ground, looking for a little bit of coverage, maybe on some hiring, maybe it's a short-term piece or a piece of equipment. And we've got a little bit of information on that further into the slides, so we'll dig in on that. So it's nice to see that there's a nice broad aspect there for different products depending on the size of your business. So that'll be fun to talk about in a few minutes. So let's talk about the different tools, John. What are the reasons that people are coming for the lending products? And let's talk a little bit about them.
Sure, definitely. Really, it's to support growth for the business. And growth can mean a number of things. I mean, usually when you think about growth, it's, okay, how can I get more customers or, expand my geographic footprint? How can I grow that way? But it's also growing your margin, which means the profit for all the work that you do and every dollar coming in. How can you grow the amount that you get to keep, right? That's like also very important. If you're growing, you're expanding, but your margins are very low, then you're spinning your wheels a little bit. Sometimes it makes sense to make more dollars for the work you're doing. And then when you have that, how you like it, then also grow the other way. And so both are really, really important. Ideally, you kind of want to be optimizing both at all times. And, it's also about limitations, cash flow gaps we touched on a little bit. When are times that you could grow in either areas and you see how to grow, but you just can't because of a cash flow gap? That's another thing. Even if you know what you need to do, if you have gaps and you're reactive, it can be really hard to execute on a great plan and opportunity you see if you're not proactively prepared. And there's an opportunity cost for that as well. So growth is also about how can you grow so you get more of the opportunities that you see and you don't grow the cost that you incur from missing out on opportunities. So again, on the bullet points on the left, there's a lot of ways that you can do that. Better equipment. Number two is how can you benefit? It's also about how can I get equipment? And you may be thinking to take on more jobs or to be able to do more work for the jobs that I get, right? And that could take the form of we want to bring that in-house, right? We don't want to have to sub that out to someone with that expertise. If we get a job and there's something that we want to sub out, maybe we want to bring that in-house and so we can increase margins that way. It could also be like if there's certain equipment, if you purchase that equipment and it's over 5 to 10 years that you're going to have that equipment, margins could increase because now you own that equipment. It's an asset for the business instead of having to go and rent that. And so growth, that again is one of the primary ways. Bringing things more in-house can increase your margins and the dollars that you take in from each job. So it's about taking on more jobs and also earning more from the ones that you're doing. And so that's how number two could work as well. Lack of capacity, payroll. Yeah, go ahead, Jenna. Did you have something to say?
Yeah, I was just going to touch on the equipment. I think, that's probably a really big one for us in the industry. And having a reliable piece of equipment that's new and has minimal downtime and increases your efficiency makes you more money and offsets some of that cost on some of those lines of credits and stuff. And I can recall one of the customers that went through Lendflow ended up pricing out an equipment piece and worked it into the contract, kind of did a preemptive, hey, this is what it's going to cost me. It was a very specialized piece of equipment and ended up pricing that out, working all of the costs into it, including the interest costs right into the bid, and was able to, realize some big efficiencies on the labor side. It eliminated a lot of labor and the bid still came in as a winning bid. And it was just kind of having that forethought to work through LMN, work through a budget, work through an estimate, and then have some conversations with a variety of lending professionals to say, hey, what is this really going to cost me if I got to go out here and find this specialty piece of equipment? And how do I win this job? So that was a huge, huge win. And that was just, an example of taking the time to work through all the numbers and have some conversations and actually just say, no, you know what, let's find a way to do this job and win this bid. So that was kind of a really neat story that I know came through you guys there last year. So.
Yeah, we love that one. It's a perfect example. Again, going back out to being proactive and going in with the confidence of like, hey, I want to go and really win this because I know I have the ability to go and get the equipment at the price that I need to make, to grow the business from this, to make money from this. So it's a really awesome example. Those are some of our favorites. How can you just use it as a tool? And whether you win or not, hey, you're putting your best foot forward. You're optimizing your chances that you're going to win. And you do that time after time, it's going to snowball and add up, right? And then that's when we really start to, see the business thrive.
Yeah. Tell me a little bit about the payroll piece there, John.
Sure, definitely. I mean, one of the problems that could be coming in is that you have, so many jobs and you may be stretched for team members that can, take those on, especially if you want to bring all of those in-house and make as much money from each job as possible. So, hiring and it is a great way to do that, but then there's a lag. Maybe you need to train them up or get them used to your systems, and there can be a lag between when they're productive and when they're making money for you, and like when you bring them on. And in that instance, if you're doing enough of that, like financing, payroll or financing these new hires in a way that makes sense, is super important, right? Otherwise, you just will have to start turning jobs down. And so if you're growing at that rate, it's a great problem to have. Right. That's, that means you're doing many things right and proactively preparing for how you're going to continue to sustain that level of growth and still provide the excellent services. Right. There's financing tools that can help you get the resources to make sure you do that well. Right. Because the last thing you also want is to get so bogged down in some of that and take on jobs that you're not able to execute at the level you're capable of because of things. Because of growth or scaling problems, and then your reputation starts to suffer, right? And if you have the resources to invest in that, to make sure you're not only scaling, but scaling at the level of excellence that has led you to win as much business as you are, I can really set yourself up for success and make sure you're taking advantage of the growth opportunities that you're seeing because of the performance that you've given to your customers.
Yeah, for sure. Those are all really great tips for sure, John. So let's talk a little bit about optimizing the business for funding success. So we've got managing cash flow. I mean, that's probably the number one within us, especially with the seasonality within the business. So talk to me a little bit about managing the cash flows, kind of balancing that out, level setting that.
Definitely. So this is a super important part. You want to manage your cash flow like we touched on a little bit before, just to have that emergency fund and to make sure for your business that you're stable and prepared for any scenarios that come up. And they always do. You all know in the business that you're running, that unexpected things happen regularly, and you have to be always ready for the unexpected. But the other reason you need to do all of that is because you need to understand how you're being assessed for credit from banks and lenders, because you need to present yourself in the best possible light. And there's simple things that you can do that may not make a material difference to the business, but it will make a material difference in how outsiders are viewing you. And so if you can just optimize some of these things, then it can go a long way in painting the best picture of yourself and your business. And so you can optimize the terms that you receive from the market. So the more you can know here, the better. That's managing your cash flow. Don't have any negative days. That's a big one. Never go into the negative. That's seen as a really big red flag. And so do everything in your power to avoid that at all times. And again, that goes back to that maintaining that balance in your account. the less huge ups and downs that you can have, the possible. As sometimes this is a little bit unavoidable, especially if you're having success. Hopefully that variance is going up. But if you see a lot of money coming in, a lot going out, and then getting close to zero, stay as far from zero in the account as you can. The higher the balances, the better. And then the lower variances of going down near that zero. Limit that as much as possible. The more stability you can show, the less variance, the better they're going to view the credit of your business, and the lower risk they're going to assess you for. Also, if you have a lot of expenses coming up, you can withhold those until after the funding event, right? If you have big decisions or big expenses or big outlays of cash, wait until the funding hits the account and it's in your account already, not after you've signed, but after it's come in. Sometimes people that make it signing, I think I got it, but then you do huge cash outlays and they look at your bank account before they wire the funds and they go, oh, what's going on here? All this money just left. Now we're scared, and they may change the terms, or they may, retract altogether. So make sure the money's in your account. You withhold all of these big expenses, and then after that, you make all those payments and have all those cash outflows. Your personal credit, that's another one. Yeah, go ahead, Jenna. Do you have anything?
No, I was just gonna say those are great tips, and yeah, I think the obvious one is personal credit, to do your best on keeping that score. And is there like a threshold there on that score, John? I think we've got it a little bit further in, but where would that threshold be?
Yeah, there's just different thresholds for different types of products, right? And so, kind of the absolute minimum is 550 to 600. You're going to be in kind of a higher risk bucket there. It's doable, and in many cases, it's about, hey, if you got to start where you got to start, and just keep optimizing and working your way up, and then get into that 600 to 650 bucket from a credit score perspective. Then work to get to 650 to 700, then 700 to 750. The more you do that, then the more the more options you're going to have in each bucket. And we've kind of identified all of the buckets that exist and are trying to fill in products for each ones, and ones that also can help you kind of level up to the next one, and where you open up new options, maybe new lines of credit or new equipment loans or new bank loans or new products. We want to make sure there's kind of a stepping stone from one stage to the next. And that comes from the credit score kind of tiers, but it also comes from the cash flow and the data within your bank account as well. Some of those other metrics too. So higher balances, less variance, all of that stuff.
And are you finding, John, like once you kind of get in with a product lender, whether it be through, any financial area or through yourselves, that once they've established kind of that first product, that relationship is building, and then the ability to renegotiate terms on a next type of product or a renewal or stuff. I mean, I think we tend to see that a lot of the clients return repeatedly for products once they're in.
That's right. We have examples of people who have leveled up and have started with some products and then been able to open up another line of credit or another equipment loan or a bank loan or a longer term loan after engaging in some shorter term products first. So we love to see those stories. Those are the best. And we always try to go to lenders who have the ability to level up internally. Sometimes you can level up with a lender, and sometimes you hit the cap at that lender. They can't do any better. It's time to move up market to a better lender at that point. And so if you can level up internally, that's great. Lenders who have that are ranked higher in the system, because we know you can level up products directly with them. But sometimes you reach your cap. All right, you're reaching a whole new tier of products. Now we need to get you to a new lender entirely. And so it's kind of the balance between those two things. And over time, again, the goal is how can we get better and better products, better rates, better terms as you optimize the business.
That's great. And I love that. I love that you guys help the customers assess that and direct them with, several options of providers and make that leveling up a little bit easier for them. So that's awesome for us. So let's talk a little bit about traditional banks and lenders. I think, we've all kind of banged our head against the wall with kind of the traditional lenders and having them not really understand our businesses and just be very in the box about what they require. And you've listed, a plethora of reasons right here on this slide about, really, really strict collateral requirements and stringent eligibility criteria, really, really, detailed financial history, and just their plain old aversion for, lending to, fluctuating seasonal construction type industry business. So anything other little tidbits there? I mean, I think they're pretty straightforward, but what are your thoughts on kind of traditional pieces? And are they still that rigid right now? Are you still seeing that?
Well, yeah, unfortunately, broadly, it is, especially with the market the way it is and high interest rate environment. So they're so focused on trying to maintain deposits, and they're less focused on earning more yield or earning more interest from issuing loans. And so it's less of a focus for many. But like we discussed kind of the outset of the webinar today, there are some who are making us, striving to push in this direction because they're preparing their business just like you're preparing yours. And they know there's a lot of businesses being run. There's a lot of great opportunities to invest in small businesses, especially the ones who are able to perform well now, because they can gain a valuable customer for when the market continues to improve, and they want to be at the forefront. Right. And so we're trying to identify where are the lenders who really are serious about understanding different data, understanding different business models, building an expertise, or going to ones who have their expertise and giving them the data, right, and marrying those two. And so, yeah, it's been awesome to see all the data, the wealth of data that's available within Element, super valuable for lenders. And we can use that to paint a more clear picture of the businesses and help them leverage that data. And what it just means is faster approvals, better rates, better terms, the more and more they understand. So it's been a big focus, adding lenders into different segments and then getting them to get comfortable with these new data sets and these new business models and getting them to understand how the business works. Where the legacy way was, a business is a business. We're going to look at a restaurant the same as, they just kind of looked at everything the same. And that's just not the case. These businesses are very dynamic and very different. And, they should be treated as such. So, yep.
Yeah, that's great. And, just the ability to have less restrictions on the use of the actual funds for the LOCs and just being able to have access to that cash flow. And I know a lot of our customers will just do a very, very short-term bridge piece that might only need 30 days worth of funding and that type of a thing. So those are some pretty cool products that, really lend to our industry that help. And especially the equipment piecing. I know manufacturers do a lot of financing themselves. Always talk to your dealers and your manufacturing lending. They offer all kinds of financing options as well. And if they don't, places like LendFlow for sure be able to help you out. There's tons of opportunity out there, absolutely, for sure. So let's talk a little bit about the process, applying for it. Is it easy? Is it hard? Give me the tidbits on it. We got a few tips here on the slide.
Sure. It's very easy. We're always trying to make it easier, both for you to go through the application process as well as to find the right options. There's been a big focus in lines of credit, right? Because we know how valuable that is for solving cash flow gaps. We've added quite a few on there. So part of the ease is just, the taking your feedback and taking your requests and going out there and identifying other lenders who are serious about improving and the things we discussed and offering it. So there's lots of new line of credit offers for this cash flow gaps. Another one Chris mentioned is equipment, right? We've got that request a lot as well. You can increase your margins by becoming a little bit more asset heavy and owning more assets. And if you have a job that you're doing a lot of and equipment that you're always renting, and that long term over the next 5 years, you're going to see a lot of that, you can improve your margins by buying that asset. Instead of that money just going out the door, that money is going into that asset over the next 5 years as you're using it. And, that can increase your margin. So there's a big focus of adding more banks, adding more lenders for equipment too. And then, more upmarket products. So to graduate you, there's been a lot that have come in, have taken products, and they keep getting better and improving. And now they can graduate in, and they're getting access to near bank products or bank loan products. And so there's been a lot there to make things easier as well, to easier access those different financial products. So the feedback's been invaluable. We'd love to hear more of it as you're going through. And we'd also love, hey, if you have questions about like, hey, what are the lenders looking at in my business? Where are the areas you think I should focus on most? What do I need to do to graduate to that next level? Then our team is kind of standing by and has, wants to help you in that area as well. So about what products are going to be the best and like what you can do to best prepare yourself and where you can improve the most.
I love that you have the team that can, field some questions and work with the companies and decide which product is best and evaluate the different offers and pick the solution that works for them for sure. And then we're seeing funding, John, anywhere, as little as 24 hours, depending on the product. That's pretty impressive.
Yeah, it's been speeding up, and you're going to see some even more speed soon. We're working with equipment lender to really speed up that process. That's one that's traditionally been a lot more slow. So we have a new one that we're starting at like 24 hours, and moving, they're dedicated and committed, and it's been awesome to work with them on that. And then another bank loan lender who is offering bank loan approvals instantly, right, in under a minute. So we're trying to like get the speed, so you could just get an answer and move on with your business so it doesn't drag out. That's a key thing to improve, because the more you're distracted or can't focus on the business, and you're focused on this tool, then the more it takes away from other things you could be doing. So that speed is key, and it's been a big focus for all of us.
Yeah, especially when you're in the midst of trying to do a bid or an estimate and wondering if you should buy a piece of equipment, and you can't wait 3 or 4 weeks for the traditional banking to get back to you and decide whether or not they're going to give you a loan for a piece of equipment or not. So these are the fun nuances that we love to see, and it's really a nice change to have products out there that understand the industry. So for more information, if you want to know more about Lend, or you want to chat with John's team and see what it's all about, or start an application, go to golmn.com/lend. Everything that you need is there, and that will connect you with John's team for more information. And we can connect you one-on-one with them as well too, through that website. So we have hit our time. If anybody does have any questions, please feel free to throw them in the chat right now, and we will make sure that we will get those answers back to you directly. I want to tell you a little bit about next week's Mastermind weekly webinar is with TechoBlock, their very own Alex. It's going to be a lot of fun, how to turn hardscapes and how to turn them into sales opportunities. And that'll be with Mark and TechoBlock's Alex. So if you enjoyed our webinar today, please feel free to scan that QR code and hit up our Google and do our review. We would love to hear from you. We'd love the feedback. And if you have any thoughts to send us, please do so. And if you want to know more about some business information, some business thought leadership, some industry experience and best practices, please feel free to follow us at golmn.com. We have all of our Instagram channels, as well as please feel free to follow Mark at his LinkedIn. The QR code's there, and his Instagram is there as well. And John, thank you so much for joining us today. That was a great intro. And I think we learned a lot about the Lend products today, and I just love to see what's changing in the industry, and it's very, very positive. So thank you to you and your team for focusing on our industry. It's very appreciated.
I appreciate you for having me. It's still early days. There's a lot more improvements to be made. We're super excited to collaborate and partner with you all on this, and it's been awesome to be here. Would love to do it again. Appreciate it so much, Jana.
That's great. Thanks, John. Take care.
Thanks, everyone.